All right, good morning, everyone. Today is, good afternoon, I should say. Today is Wednesday, June 6th, 2012. All right, let me get started. You can see what the results are right here. The NQ were minus 2 ticks. The ES were plus 48 ticks. The YM were plus 4 ticks. I'll go over all the trades in just a moment. If you have not taken a free trial with us and you want to take a free trial, the free trial comes with everything that you see here. It comes with all the charts, data, and indicators that you see here. You also get 2 hours per day for 5 business days from 9:30 a.m. to 11:30 a.m. Eastern Time in the live trading room, where we'll show you what it's all about and how to actually take profit from these setups that I'm going to show you here in a minute. You could have done as well as, if not better than, I did this morning had you taken the trades that I took. All right, now to do that, you go to www.cfrn.net/apply. All right, www.cfrn.net/apply. Now, for anyone who's in here on a free trial, whose free trial is expiring, you should have the information you need in your email. You should have a CFRN partner mentorship offer in your email from me that explains to you how to become a partner. For those of you who are partners, there's a partners meeting tomorrow night. We have our weekly partners meeting tomorrow night, Thursday night at 9 p.m. All right, every Thursday night, 9 p.m. Eastern Time, we have our partners meetings. When you become a partner with us, you get 3 months of live trading room, 3 months of weekly trading zones, 3 months of access to the members area where we have over 150 hours of videos. You get 3 months of weekly partners meetings. You get 3 months of swing trades if we put any out. You get the indicators when you become a partner. You get the indicators for life when you become a partner. After the 3 months, if you want to remain a partner, an active partner, you still have the indicators, but to keep the weekly trading zones, the access to the members area and the partners meetings, and the live trading room, and the swing trades, it is $75 a month. All right, that is how it works. Let's see. Let me go over the trades. All right, I didn't take all that many trades on the YM and the NQ this morning. There weren't that many that set up just right, but I will show you the ones that I did take. Okay. I actually even put all this text in here so you guys can look at it. I put it in this morning for the guys in the live trading room. The steps on this is the same steps on everything except the ES 10,000 contract chart. This is how you take the trade. This is the setup right here. All right, step 1, you look for a bullish cross of the MA1 over the BBC. All right, right there. Step 2, you look for divergence between the green line down here and the cycle portion of the slingshot, which is the thick red and blue line. Step 3, you look for the price to pull back down and test the BBC right here. Okay. Step 4, you get an up close for entry with momentum in the direction of the trend. So right there would be the spot. I missed that trade this morning, unfortunately, but that was the first trade setup this morning. All right. The second one I did actually take was right over here. I got long over here when price pulled down, tested the BBC, gave an up close. I think I might have actually even gotten long over here. I don't think so. I think I got long over here. Gave an up close, and I got long in there, and it moved up in my favor quite a bit. I moved my stop up to, I was actually trailing my stop behind the M81 right here, and it got me out over here with some profit. All right. You can see I was outlining all the divergences as they were happening down here. Now, when you change the size of a window, it throws arrows in different places, so not all the arrows are going to be lined up perfectly with the divergent situations. But I took a short over here and I lost 8 ticks on that one. I took a long right here and I made some profit on that. There was another short in here that I missed that went down a few ticks, not too many. There are some divergences in here on this run up, but it never pulled back to test the BBC while we still had the divergence. All right, we had some divergence here, but the MA1's on the wrong side. Over here we had divergence and a down close, but the cycle was moving up. Right in here, this would have been okay, but we had too many bars below. So we really didn't get that many really nice opportunities here on the NQ this morning. All right, I took the ones that I could. and that was it on the NQ. The YM was a lot like the NQ this morning. Let's just go back here. The same exact setup over here on the YM. You can see the bullish divergence here. This was right at the open where we had all that divergence and stuff on the NQ. This is the same spot. We had it here. There was a little bit of divergence right here, bullish divergence. And price pulled back down, tested the BBC, gave an up close. So there was an entry possibility there, but it wasn't perfect divergence. The cycle was headed down in red. Over here, where we had nice divergence and it tested the BBC with a down close, either here or here, either one of those moved down. Let's see, moving over here, we had some nice divergence there, but it didn't test it. Here it did, and I got long here, and I took some profit on that. Over here we had bearish divergence. I got short in here, and I took a loss on that one. Over here we had bullish divergence right in here. It tested the BBC. It actually did it twice. Let me point it out to you. Here's one, and here's the other one. Right there. So we had bullish divergence twice. It tested the BBC here. You could have gotten long there, or again here. I got long on the second one, and I took some profit out of that. Let's see, moving along. The cycle was in the middle here, so we weren't looking to do anything in here. Right in here was a nice opportunity. This was quarter after 10. We had a bearish cross. Price came back up, tested the BBC. We had bearish divergence down here. This would be like an A-grade trade because everything was red. The MA1 stayed red on the pullback and on the down close. And right here, the cycle was red all the way down. All right, that was really nice. Unfortunately, we missed it, but but it was there nonetheless. Okay, it was there. Now, if anybody has any questions, just type them in here, and I will answer them as we go along. Okay. Was the 1289 based on being enough above the weekly trading zone to confirm it had broken, or did you get that price from something else? That was Jack in that case there you were talking about, Dwayne, right? Dwayne can answer that when he comes back on in a little while. All right. I could answer it for him probably, but I think since the question was to Dwayne, I'll let Dwayne cover it. All right. So in here we had bullish divergence, tested the BBC with an up close. Over here we had more bullish divergence, tested the BBC with an up close. I didn't get any of these. All right. I think I was long in an ES trade at the time. And I'm going to get to my ES trades in just a minute. Here we had bearish divergence, but the MA1 was above the BBC, so we didn't have anything in there. Just scrolling along, we really didn't have that many great setups here. Here was a nice one right here. See, the BBC was above the MA1. Price came back down, tested the BBC, gave an up close right in here with a bullish divergence. It also did it right here and right here, and that moved up. Right here we have bearish divergence currently. We have bearish divergence, and the MA1 is below the BBC, so the entry on that would have been right there. Okay, right here. This down close right there would have been the entry. All right. Now that was the NQ and the YM. I took trades on both those markets this morning, and that was that. Now I'll show you the ES. The difference with the ES, the way that I've been trading it lately, is I'm just taking pullbacks to the BBC. Now I'm not going to take a pullback that's going right into the weekly trading zone. Otherwise I would have taken this first one right here. All right. You see you have your bullish cross. You pull back to the BBC. Now, I was thinking of the rules before that I had. Anyway, there's fewer rules here. You look for your bullish cross, the MA1 over the BBC. Then price pulls back down, tests the BBC here. Okay, it tests it right there. At that point, you're looking to enter. Once you get the bullish cross, you're looking to enter a pullback to the BBC. All right, that's what I did up here, and again over here. I didn't do it here because it was going right into the weekly trading zone, so I didn't want to trade into the zone. Okay, so price, it hit the BBC, it went up 8 or 9 points. It pulled back down over here, and I got long right over here. And it drew down almost to my stop. I had a 2-point stop on this. I always have a 2-point stop on my ES trades. Hang on a second. I will answer that question, Jack. Okay. right here, it pulled back down to the BBC. I got long right here, okay, and it moved up from there. I took 2 points profit out of that trade. Obviously, it kept going beyond that, but that's what I took out of that trade. On the next trade here, it pulled back down. I entered at the BBC again. I took 1 point profit out of that trade when it got up to the MA1, and this was the high of the day. Price had gotten right up here to the high of the day, and I had moved my stop up to plus 1 point, and it took me out at plus 1 point before it moved up another, however many points that was. I think it moved up another 4 or 5 points after that. There were more opportunities here. This was right at the close of the morning session. You could have gotten long again here for another 2 points, and long again here for another 2 points. All right. Those are both pullbacks to the BBC. Now right here, there's also a pullback to the BBC. And, you know, as long as you're making higher swings, eventually one of these is going to fail. All right? But as long as you're making higher swings and the trend keeps going up, you're making higher highs and higher lows, then the trend is still going up. Okay? So you can still keep taking these trades. Now, is that going to kill you when the trend is flat? Yeah. If the trend is flat, you're going to go back and forth a lot. And now, at that point, you can just stop trading and say, I'm just going to wait until there's a defined trend one way or the other. All right. But today, obviously, the trend was up, and it was a pretty easy day to trade it. All right. So 2, 4. You could have taken 2 out of this, 6, 8 points. And if you would have taken this first one, 10 points pretty easily available if you took just 2 points out of each trade. I took 2 out of the first trade, 1 out of the second trade, and you guys saw I did it with 4 contracts, so that's what we have. All right, 48 takes profit. That was my morning session. Now, let me go back here because there was some questions about stuff that I was showing over here. One was, you noticed on some of the divergences, pullbacks, it looks like the MA1 crossed back down again, barely. Our price goes below them. What does it take to negate the trade? Jack, for me, negating the trade would be the cycle portion of this turning against me. Too many bars on the other side of the BBC. Like there was one of those in here somewhere. Let me find it. Right here, for instance. It pulled back down to the BBC right here. And you see it had a couple of bars. We still had the bullish divergence right here. But this was the second bar down. After the second bar closed down like that, I would have taken the trade off, even though we still had the bullish divergence. Okay. You can see this one kept going down, but there are more examples of that same thing happening. That's also an example of the cycle portion turning red and heading against you. But let me find another one of those. Right here, where it pulled back down, hit the BBC. We had bullish divergence. It only went 1 bar down. Okay. Now right here, when you got the up close, you might have been thinking, okay, that's a good spot to get long. And you may have been thinking that, and it would have been. Obviously, in hindsight, it would have been fine. But the cycle is going down, so that would have negated it for me. All right, the cycle moving down against me like that, that would have negated it. This little bit right here where it went against it, you were already in that trade. If you took that, you were already in it, so you're just in it to win it at that point. Let's see, I'm just looking back. Does that help, Jack? Okay. And Mike, you wanted to know what the black and brown lines are for. Let me show you that on a different market. Let me show it to you on gold. Okay. This is gold on a 4-tick range. Let me take this thing off so as not to confuse anyone. There we go. All right. Now, the black and the brown can be used in a bunch of different ways. One of our partners came up with a way to use it. There's a bunch of different things that you can do. When price gets all bunched up at the bottom, like this for instance, not price, but all the indicators, all these lines, all 4 of these lines get all bunched up at the bottom, and then they all move up through the cycle portion, like this. That's usually indicating there's a bottom happening right there. All right, and you'll be moving up pretty strongly from there. Let's see it on the other side. Up here, they were all bunched up at the top, and they all moved down. That wasn't a perfect scenario, although it worked out. You know, I'm trying to find a better one. Over here, this is a little better. You see, they were all bunched up here, and then they all moved back down through. That's one way to use all the lines. Okay, and you can see, you know, from the bottom, moving up. From the top, moving down. That one didn't really go anywhere. From the bottom, all of them moving up. From the top, all of them moving down. You see what price is doing when I'm doing this, right? From the bottom, all of them moving up. It didn't really go too far, but mind you, this is gold and it's 10 bucks a tick, and I'm not really paying attention to the time of the day or anything like that. If we come over here, let's see, they weren't all on the bottom right here. They were all on the top right here. It moved down a little bit, not very far. Over here, it hasn't been all on the bottom for a while. That's one way to look at all the lines. Now, let's take this off and bring up, let's see, the Russell. Okay, here's the green line and the black line. Just the green and the black. You know what, I'm going to take the green off and put the brown on, since that's the one you're more curious about. There. One way to look at this with the green and the black, not the green and the black, the brown and the black. If you're just looking at the brown and the black lines, look for crossovers from the oversold and overbought areas. This is the Russell 2000. But you know, if you're looking at it on this is a 500 contract. If you look at it on, oops, not a 4-tick momentum, though that would work too. 4-tick range from the oversold and overbought areas. I can put those on too. You see how versatile this slingshot is? You just click a button and you can put all these areas on there. The black sawtooth line, that is a 5 EMA set to step line. Oops. That's the actual price. Well, you just have to take my word for it. But you see down here, this is the oversold area. You get a cross up, it goes up. Up here, this is the overbought area. You get a cross down. And it's not going straight down, but we're in a pretty strong uptrend. You get a cross up, and it goes up. From the overbought area, cross down, it goes down. That's one way you can look at this, okay? Up, down, down, up, down. And you can look at it on a larger time frame as well. You know, like right there, I was looking at it on a 4-tick range. Here's 144 ticks. This is a tick chart, though, not a range chart. Okay, you'll have a little more opportunity to get into the trade on this. You'll see it coming for a little bit longer. That's one way to use it. Okay, there's, you know, initially I had the 500 contract on here, right in here, right there. That's in the middle. With the 500 contract, you're not going to get that many opportunities on the Russell. But you know, you can look at it on whatever time frame you want to, whatever suits your comfort level with trading. Your risk level is what I mean. Okay. That's what they can be used for. That's how you can use them. There's practically an infinite number of ways you can use the slingshot, but that's just an example of how you can. That black sawtooth line, as I said, was just a 5 EMA set to step line. Let's see. I think that's it, guys. I think I've covered everything. Do you guys have any more questions? I am happy to answer any more questions if you have any. Jack, you had asked about the 1289. You were talking about the 1289 that Dwayne was talking about when he mentioned a pullback to 1289 right here in his tweet, and Dwayne can cover that. All right. That's it. I'm going to stop the recording now. I don't see any more questions coming in.